Dow Jones and NQ coming in a bearish phase. How do I see if gold is top? I don't know. What do you think, Gobari? Gobari is a little bit more in tune with those pairs. I'll take a quick look. I mean, I don't want to be too bearish, guys. Just saying. Typically, the summer is bearish. I don't know if we necessarily go straight into a bear, but that's kind of what I'm seeing on NQ right away. Boom, boom. Probably have something similar happen over there. Not enough data on gold for now, to be fair. But if we go back over here to the support resistance zone of like 2930 and we reject, we're probably going to go lower. Like this, these are the two main zones that I'm seeing. We have like this little supporting area, and we have like this rejection area to make it a little bit bigger, but that's mostly what we're looking at. I think if we break below this, we're probably going to go quite a bit lower towards this area. We can flip back above this and get a closure above 29.55. We'd probably go higher than that. But the markets are shifting. Once again, I've told you guys about this before. I'm sure Davis talked about it in his sessions as well, right? We're already getting quite a lot of bearishness. Bitcoin in the 80s, a lot of altcoins down quite a bit over the all-time highs. But I am still expecting higher prices later on this year and early on in 2026, like I mentioned before. The market is just, generally speaking, the market is just quite suppressed, in my opinion. My last cycle was pretty garbage, and this cycle as well. What are you seeing, Dave? Yeah, Bitcoin is bearish. I'm just confirming all the numbers. It's a little bit different between the screenshots. This is the one, right? US 30, 8 cap. That should be the one. So I'm pretty sure that's what he was looking at. So I sent this earlier today, looking at what I believe is the order block. Entry at the top, stop loss at the bottom. Take profit at the top order block, if I'm not mistaken. Level to level. Okay, so let me start off with this. First off, I want this to be clear. I'm not recommending anybody, or you specifically, Gobari, to do this. I'm just giving you information. This is my perspective. You need data to backtest and prove whatever it is that you're looking to do. There's pros and cons to everything. So, do you think the system will work just as well in a bear market? Yeah, it doesn't matter because we're trading equities, not Bitcoin or Ethereum. So I think it'll be totally fine. Kabar is a beast. Okay. So first thing that I notice, and this is what I personally do with a lot of my trades, whenever I'm doing higher time frame, um, whatever, like swing trades on Bitcoin and crypto, I use a lot of manual stops. This trade would have hit full TP with a manual stop because there was no 1 hour candle close under the order block. And that's what I think Casuan mentioned. Is it Casuan? Yeah. Yeah, yeah. I don't know if he was talking about the exact same trade, but in this case, with trading, you have to consider why am I entering? Why am I actually taking this trade, right? Like, it's actually a really good question, but why are you taking the trade? What's the reason you're entering? What's the reason why you would exit for stop loss? What's the reason you exit for take profit? You got to ask yourself those questions. The reason why you're entering is because we are entering into, once again, goodbye, I want this to be clear. I don't know everything about your edge. I don't know everything about your analysis. This is my perspective. You can correct me, you can, etc. And we can do this in future sessions as well for me to understand your edge a little bit more, etc. Right? But this is just how I see it. You're entering the trade because we're entering into this bullish order block, right? So you set a limit order looking to enter because we're hitting the bullish order block. You're setting a stop loss, in this case, at the bottom of the bullish order block, thinking if we go lower than that, then it's invalidated. And you're looking to take profit over here, going into this bearish order block. Right now, exactly why here, I'm not entirely sure, as opposed to just the start of the order block. Maybe it's because it's the halfway point or something. For one, you need data to prove that it's worth setting a limit order going right into this level. Because basically what he did is, this is in UTC -5, so not my exact time. I think I'll just bring it to my time. So he set this limit order at 10:21 a.m. my time. So he set the limit over here saying, hey, if we go up here, I'm shorting. If we go over here, I'm long. Right? I think he also set yeah, a short up there. So over here is thinking, hey, we either go over here, we're shorting, stop loss over here, or they're going down here, longing, stop loss over here. So first things first, you need data to prove that it's worth setting a limit order right at that level. In other words, you need proof that we hit this area and we instantly move towards your profit, as opposed to us going in, holding for a little bit, and then giving you the chance and confirmation to actually get in. Or you need proof basically that that you can get in like this without it necessarily going straight to your hard stop loss. You basically just need data to prove, right? Whatever it is that you're looking for. And there's a couple things you can do. Whenever you're looking at these setups or back testing, what you can do is you go into a lower time frame, you can just drop your levels, see what happens when you hit them, and then just observe. You don't have to have any pressure, just observe. Trading view, FX replay, whatever, and then just see what happens. In this case, let's go down to the 1 minute, right? Boom, 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 boom. So what happens is we hit into the entry area, and then we go up here. right? So we hit it and we immediately have a pretty strong move. The next thing, we go down into the area, we hold it a little bit. We go down, also depends on the time frame. We're looking at the 1 minute. If you're looking at the 5 minutes, already a bit of a different story, right? So if you're looking at, let's say, the 5 minute, we come into it. You can barely even really tell that we had a bounce. We go down all the way to the bottom, and then we start to get a buyback. We come back into it, we hold it, and that is when we actually start to move out of it. Then from there, we go up here, we retest, but not all the way back down to the entry. And then we go over here. We don't even have a rejection at the start or where we set our TP. Goes all the way to the top, and then we start to create swing failure. And we come back down. In this case, if you're looking for the short, there's no confirmation to enter a short here because we're still coming into it very strong. Once again, my perspective. We go all the way over here, then we start to reject, but we're still inside of the actual area. Then over here, we go outside of the area, we come back and we start to reject and create swing failure. This could be a potential entry, in my opinion, right? So, a couple of things that I'm seeing there, right? Another thing, like I said, is if the reason why you're entering into this is based off a 1 hour time frame and a 1 hour order block, and the reason why you would exit is for us to violate the order block, in other words, for us to just go lower and not hold it, either way, you should only exit when we actually do that, which is where manual stop losses come in. Like I said, pros and cons. In this case, Gobari, since we're doing what we're doing, I don't recommend manual stop losses, right? Unless we do it a very specific way, and unless, like I said, we actually have a lot of data. In other words, we go over the dozens of trades that you've done in the past like 2 months or so, and we find proof that us using manual stop losses makes us a lot more. We have less losses, in other words, higher win rate, less losses in a row. We have more winners, and those winners make up for the losses, and the losers, which are bigger than expected due to the manual stop loss nature, we are actually able to we're able to withstand those losses and they're not too large, right? Especially with maximum daily losses and everything else. And also in a real market, which would come with live or forward testing, you need to see, are you actually able to handle a manual stop loss? Are you able to exit at the exact time that you're supposed to and not just kind of forget about it, for example? And if you're holding overnight, well, once again, that's a whole other thing. So if you're using a hard stop, make sure, and I recommend hard stops, especially with what we're doing right now. Um, I would say look for some sort of confirmation the level that you're looking at. Look over the data to see if that's something that actually makes sense. And yeah, if you can find some sort of clarity there, then great. You can also look to modify your stop a little bit, and you can figure out by back testing, hey, typically, how much are we going out of our order block, right? There's a couple of ways you can measure this. I don't recommend measuring in points because if you're looking at a 5 minute or a 15 minute order block, totally different, obviously, in terms of points. What you could use is fibs, right? Here's a little recommendation. You could back test, and maybe this is going to be useful, maybe not, but this is what back testing and data collection is for to see maybe this is useful, maybe it's not, right? You don't know until you know. So I'm gonna go and draw a fib, and I'm gonna start to figure out what extensions we could use real quick. I'll just put my apple over there. I look like an anime girl with a toast in her mouth trying to get to school. Anyways, so I'm gonna go and describe it from the top to the bottom, and then I'm gonna go ahead and just build a new fib over here. Um, I'm not gonna build the whole thing because honestly, I can't be bothered. All right, but you can also figure out typically how deep into it do we go, right? You can review all of your trades and see, hey, how often do we tap just the top or the bottom in which like the start of the order block, and then we instantly go in my direction? How often do we go to the midpoint, and how often do we go to the bottom? Let me just explain why that's very important. In this case, you're looking at a 5.3 risk to reward trade. If you have data that proves we're typically hitting the mid zone, right, the point 0.5, your risk to reward instantly from a better entry goes to like a 13. Same setup, just change the entry, like almost tripling your profits. Massive, right? So that's another thing to consider. Of course, you have to figure out, hey, how often are we hitting, the start of the order block and then we go into profits and then we miss out on the trade because we didn't get the entry, right? You got to figure out how much R is this costing me? What about the losers in a row, right? How many more losers in a row are we going to get if we're not actually managing to hit some of these trades? Is the profit worth it, et cetera? Is it worth it in terms of my psychology in a real market? It's another thing to consider and to test. And yeah, once again, just looking at all that. Same thing with the take profit, right? At the start, at the mid zone, at the top. These are the kind of things that you can be testing. So, what I recommend for this, in case you want to figure that out, to have like a random, not a random, but like a general idea of how you can avoid getting barely stopped out, because I have seen this in some of your trades, Kabari. Um, Once again, not calling you out or anybody out. I'm just looking at data. And you guys know I love fucking data. So in this case, we perfectly hit the minus 0.36. So 236. The minus 0.236 FIP. Perfectly right there, right? 43 32767. If I just go over here and we look at the L over here, 432328666. Basically the fucking same thing, right? So I mean, if we really zoom in, we probably didn't hit it, right? Just barely. But because of spread and shit, basically hit it, right? So then you can maybe find some sort of other extension and see what that looks like in terms of R. Maybe just the minus 0.25. I don't fucking know, right? In this case, maybe you find that that's fine. Once again, one piece of data, one random example, one idea. You need to write your ideas and actually prove them with data. But in this case, your R would go from 5.3 to 4.2, but you would have actually managed to hit the trade in this example, right? Um, so does that make sense, guys? There's only so much that I can do with just like one trade of data. Okay. Is that useful, guys? This is what these sessions are for, guys. The live coaching sessions, this is what they're for, right? Because this is the shit that I've learned and this is the shit that I do. I've been doing this for like 5 years.